Hello everyone, welcome back to our educational channel. Today we are going to learn about the concepts of factoring and forfeiting. Now let's start with this video. If you like the video, do hit the like button and do not forget to subscribe to the channel. You can find the link to the playlist on international trade finance in the description box at the end of this video as well as on the I button. Factoring and forfeiting. Factoring and forfeiting are similar services that serve to discount invoices to provide better cash flows to seller and mitigate the risk involved of credit payment. Instead of explaining both these concepts one by one, it would be simpler for you to understand with the similarities between both the concepts and the basic differences. So both of these are financial services which is provided by third-party agency. Third-party agency in case of factoring is known as factor. In case of forfeiting is known as forfeiting agency. Now let's take an example. So suppose there is a seller, there is a buyer, and then there is a third-party agency which can be factor and the forfeiting agency. Now between the buyer and seller, credit transaction is decided. So what happens? Seller has decided to sell the goods to the buyer, and buyer has promised to make payment after certain time period. For example, after 90 days. So seller has already sold the goods and buyer has said that he will be making the payment after 90 days. Meanwhile, the invoice or the bill is generated on the name of the buyer. So invoice will be containing all the details like the amount that needs to be paid, the description of the goods that has been sold, and the time period which is involved in this particular transaction, what would be the due date of payment. So this particular invoice, it is generated on the name of the buyer, a copy is given to the buyer, one is held with the seller, and the seller, because the seller is running the business, he can't wait for 90 days for the funds to be coming to his business. He needs to maintain the cash flow so that he does not miss out on any opportunity in the market, does not miss out on any competition in the market, and so he needs to maintain the cash flow in the business, the working capital, the liquidity in the business. Now for that reason, a service is provided which is referred as factoring. And then there is forfeiting also when we talk about long-term receivables. So seller can go to the third-party agency. He can ask for immediate cash payment in the business, and instead he will be providing the invoice which was generated on the buyer name so that the third-party agency, they can collect the payment on the due date. I will be explaining the whole process with the help of a chart that has been prepared in the coming slides. So don't worry, let's see the differences between both the concepts. So factoring is usually for short-term receivables. When we are talking about a credit transaction, when the payment has to be made under 90 days, it is generally referred as factoring. When it is for long-term receivables, where the payment has to be made over 90 days and up to 5 years, it is referred as, the service that is provided is referred as forfeiting. Factoring may be both recourse and non-recourse, while forfeiting is only non-recourse. So, what is the difference between recourse and non-recourse facility? In recourse facility, the the responsibility of following up with the buyer, the responsibility of getting the payment from the buyer on the due date lies on the seller itself. So that is referred as recourse facility. However, when we are referring to non-recourse facility, all the burden, all the responsibility is also transferred to the third-party agency. So the invoice is provided, the receivables that are generated is provided to third-party agency, and what seller has done, seller has received the cash payment which was required by paying certain fees, which was by agreeing to pay the fees that is of the factor or the forfeiting agency. Instead, in non-recourse facility, rest all the work is done by the third-party agency, which includes that following up with the buyer, noting down all the dates on which the payment will be due, keeping a record of the same, taking the liability of default on the payment. So what if the buyer is not ready to pay on the due date? The responsibility of default will lie on the third party agency, the factor and the forfeiting agency when we are talking about non-recourse facility. It won't lie on the seller. However, in recourse facility, the responsibility of default will be there on the seller. But when we are talking about factoring, when we are talking about forfeiting with a non-recourse facility, all the responsibilities, all the burden is transferred to the third party agency, that is the factor, that is the forfeiting agency. Now here in factoring, 80 to 85% of invoice value is usually provided upfront, but in forfeiting up to 100% of invoice value is provided to the seller. So if the invoice was generated for say 1 lakh rupees, so 80,000 or 85,000 will be provided to the seller as an immediate cash payment requirement for the business. In forfeiting up to 100%, which means the total of 1 lakh rupees will be provided at that particular point of time. Now we will see that why banks or any third party agencies are providing this service, because they are charging their fees for it. They are charging this fee and are giving more options to the customers, the client base, to maintain their business with them. Under both these financial techniques, seller sells its outstanding invoices to a third-party agency and raise instant cash liquidity for business. So we already understood this. Now let's get deeper into the process flow chart. So see, whatever I explained, you can just figure it out through this particular flow chart. So there is a seller, there is a buyer, they both agreed on credit transaction. Now the goods are sold on credit to the buyer and invoice or bill is raised for payment. Second step is this invoice is then assigned to the factor and get 80% of invoice value as immediate cash. So we are talking in the case of factoring. In forfeiting also, the process flowchart will remain same. Now the seller has provided the invoice to the factor and has got 80% of the invoice value as immediate cash payment. Then the statement of factoring, that this particular factoring arrangement has taken place between the seller and the factor, is provided to the buyer also, and the invoice which was generated is also given to the buyer for payment on the due date. On due date, when the buyer made the payment to the factor, so on due date, for example, after 90 days, it was decided that the buyer will be making the payment. So after 90 days, buyer has made payment to the factor. Instead of making payment to the seller, now the buyer is making payment to the factor because it was a factoring arrangement between seller and the factor. The statement of the same was given to the buyer. So the buyer is well aware that he has to make payment to the factor. Once the factor or third-party agency has received the payment, they would be providing the balance 20% which was not given after getting the payment from the buyer to the seller. And for all the service which is being provided for this particular time period, fees is charged. We can just quickly read it out to make the concept totally clear in our mind. Before that, I will also again try to memorize this to you. Factoring is suitable for short-term and domestic transactions, while when we are talking about forfeiting, it is suitable for long-term international transactions. So when we are talking in case of international trade finance, the trade transactions, mostly the arrangement that we observe is forfeiting, because there are long-term transactions, there are large number of receivables, and to keep the transactions going on, to keep the cash flow generated with the exporter, the forfeiting service is taken by the exporter in large. Seller deliver its good to buyer under credit arrangement. Invoice is generated on buyer specifying the payment amount and due date. Instead of waiting for the customer to pay, seller can choose to factor this invoice. Factor this invoice means to discount the invoice to get the invoice liquidity. Seller sells the invoice to the factor for discounting of invoice value. Factoring company advances a portion of invoice amount to seller immediately. Factor collects full amount from buyer on due date after deducting the fees. Remaining balances paid to the seller. So this is the whole process flow which is defined in a clear manner so that you can easily understand how it takes place. The only difference between factoring and forfeiting is that one is for short term, one is mostly taking place in domestic transaction, another one is long term and is taking place in international transactions. When we are talking about short term, it is usually for less than 90 days. Long term is usually more than 90 days and for approx 5 years, 10 years as such. Now let's see some of the advantages of factoring and forfeiting. So the benefits are immediate cash flow improvement. So I already mentioned that businesses do not, sellers or exporters, whoever is running a business, they do not want to miss out on any opportunity because of absence of liquidity in the business, because of absence of cash flow in the business. So they need certain services which can provide cash flow immediately. And also they cannot expect that immediate cash flow from the buyer, because then their business, most of the buyers, they won't agree to pay to make immediate cash payment. They will be asking for credit periods. So in this condition, the businesses, the sellers, they need to depend on banks as well as the third party agencies so that they can fulfill their cash requirements and also can maintain good relations with the buyer and can provide more and more credit transactions to not miss out on any good opportunity. So it improves immediate cash flows. It reduces the credit risk. So as I mentioned about the non-recourse facility, the responsibility is transferred to the third party agency, the factor and the forfaiting agency. So all the efforts they need to make, invoices provided to them, the factoring arrangement has already taken place, so they need to follow up with the buyer. They need to take the responsibility in case if there is any default. They need to take the responsibility if payment is not made on the due date. They need to maintain the receivables. They need to maintain the records of the same, that when they will be getting the payment. So all these responsibilities are transferred, and thus the risk involved with this particular credit transaction is also reduced. Outsourcing of collection efforts, enhanced financial flexibility. So financial flexibility is being provided through financial services of factoring and forfeiting. Forfaiting long-term financing for exporters, mitigation of payment risk in trade. It is the same concept. As I said, the risk involved will be lessened down. It will be mitigated. Ability to offer more favorable credit terms. Only once the cash flow requirement is maintained in the business, then the seller will be able to provide more favorable credit terms to the buyer to get more business. Diversification of funding source. Also it is a kind of diversification which is provided to the sellers, to the exporters, that they can take this service also to get their requirements fulfilled of the business. Now the fees that is charged for this. First one is commitment fees. This is payable to the forfaiting agency for his commitment to execute a specific forfaiting transaction at a discount rate within a specified time. Second is discount fees. This is interest cost payable by the exporter for the entire period of credit involved, and this one is deducted by the forfaiter from the amount paid to the exporter against the bill of exchange. Now, what exactly is the benefit to the bank? Why the banks or the third party agencies, they are providing this factoring and forfaiting service? They so that they can provide an innovative product range, providing 80 to 100% of invoice value. So we saw that in factoring 80 to 85% of the invoice value was given, but in case of forfeiting, about 100% of the cash requirement of the invoice generated was fulfilled of the seller. Banks gain their fee-based income, and we saw that the fee is generally this discount fee and the commitment fee. The fees that is charged for the factoring and forfeiting service to be provided is generally between 1% to 5%. Now this depends on various factors like how many invoices are to be discounted, what is the risk involved, so what is the rating, the credit rating, the credit history of the buyer who is involved in the transaction, Also, the time period that is involved, the longer the time period, the more will be the risk. So considering all these factors, the fees is charged, and as I mentioned, it is generally between 1% to 5% of the invoice value. So thank you so much for watching. Thank you for joining us in this learning journey. If you found this video helpful, don't forget to like and subscribe for more educational content. And as always, please feel free to leave your questions and comments below. Until next time, keep learning and exploring the world of finance. Thank you.